Hey there, fellow construction aficionados. Welcome to this new edition of the Construction Cashflow Show. I'm your host, Stu Davidson, and buckle up because today we've got a dynamo in the house. None other than Craig Alexander Rattray. He's the financial virtuoso who's all about ramping up profits, supercharging cash flow and boosting shareholder value for construction mavericks just like us. Get ready for a roller coaster of financial wisdom tailored just for our industry. So let's dive straight in. Oh, and hey, don't forget to hit that like and subscribe button. We've got loads more insights coming your way. Plus, join the conversation over at constructioncashflow.locals.com. So let's keep the momentum going. And so without further ado, here's Craig.
So I want to make sure that my clients have got good up-to-date information and management accounts so we can actually learn from that information. What did we do last month? Why are we different from budget? Are we good different? Let's do more of it. Are we bad different? Right? What do we need to change? Did we not price it right, or did we not deliver it operationally properly? Let's break it down by project and understand that. And if you can do all of that, you can then enhance your margin and you can enhance your cash flow. And if you're looking forward as well and you've got the forecast, you can then work out what funding you need in order to grow the business. And for me, that's the key to success. The key to success is looking forward. Most business owners are in business because they are good operationally. So they set up a business because they could build houses or they could fix roofs or whatever that may be. That was their skill. It wasn't about running a business. And most business owners haven't been taught anything about finance. So most don't know what a profit and loss account is or a balance sheet is. They don't know the concept of forecasting and what banks need and what investors need. And over the last year, I think last May, I set up Know Your Numbers, knowyournumbers.biz. And that's where I take groups of business owners and I educate them on all things finance, done over a 6-month period. And I tell them about a profit and loss account, a balance sheet, about cash flows, forecasts, funding, cash, and things like gross margin and EBITDA, the things that accountants don't want you to know. And that might be controversial, but in my experience, it's true, because most accountants don't educate business owners. They don't explain things. They ask you to turn up once a year to sign your accounts and tell you to send the revenue a check. See you again next year. There's no added value whatsoever in that. And the business owner at the end of the day isn't getting any advice in terms of making their business better or understanding the dynamics and the cash flow and the working capital and all those sorts of things. So I really make an effort to educate my clients, and in the Know Your Numbers, we're doing that with a variety of businesses. Most business owners are in business because they are good operationally. So they set up a business because they could build houses or they could fix roofs or whatever that may be. That was their skill. It wasn't about running a business. And most business owners haven't been taught anything about finance. So most don't know what a profit and loss account is or a balance sheet is. They don't know the concept of forecasting and what banks need and what investors need. And over the last year, I think last May, I set up Know Your Numbers, knowyournumbers.biz. And that's where I take groups of business owners and I educate them on all things finance, done over a 6-month period. And I tell them about a profit and loss account, a balance sheet, about cash flows, forecasts, funding, cash, and things like gross margin and EBITDA, the things that accountants don't want you to know. And that might be controversial, but in my experience, it's true, because most accountants don't educate business owners. They don't explain things. They ask you to turn up once a year to sign your accounts and tell you to send the revenue a check. See you again next year. There's no added value whatsoever in that. And the business owner at the end of the day isn't getting any advice in terms of making their business better or understanding the dynamics and the cash flow and the working capital and all those sorts of things. So I really make an effort to educate my clients, and in the Know Your Numbers, we're doing that with a variety of businesses.
Hi Craig, it's a real pleasure to have you on the show. How are you doing today?
Very well, Stu. Thank you very much for the kind invitation. Looking forward to chatting today.
You're most welcome. So tell us, Craig, how did you get to where you are now and some of the challenges you faced along the way and also some of the successes?
Okay. I guess the starting point, I suppose the first challenge was that I was born into a council flat in the outskirts of Wishaw in Lanarkshire in Scotland, and none of my family had ever gone to university. And throughout school, I always did well. I was always top of my class. And for some reason, I wanted to go to university. I still have no idea why to this day. Wanted to do law or accounts, decided I'd do accounts because I was more mathematically minded. Did a degree at University of Strathclyde, basic accounting with some other business topics as well. Applied to the Big Six, as was at the time. I wanted to work for an international firm. My plan was to go and work abroad somewhere at some point. I got 6 offers from the 6 of them, so that was very fortunate. Chose to work at Anderson's, Arthur Anderson, as was. They were fine when I left them. Training was great. I got a broad experience, but I got probably about half of my time was in corporate finance. And I quickly realised that I didn't enjoy audit because audit added nothing in my view. We were looking back at something that had happened, couldn't change it, couldn't influence it, whereas the corporate finance side of things was exciting and it was about value and being commercial. So enjoyed that. Plan was to move full-time into the team. As part of that, I did a secondment to the private equity arm of one of the banks based in Glasgow. Did that for 6 months and didn't get around to going back. I took up an offer of full-time employment there, stayed there for a couple of years, then moved on to another VC firm and then another private equity firm. That was probably about 4 years or so post-qualification. Then I moved into industry. I did a financial controller role for one of my former investee companies who had been bought by a New York Stock Exchange listed company. And I learned more in the 18 months in industry than I had in the previous 8-9 years through my CA training and through all my VC private equity experience. Because we were at the coalface. It was about paying the wages on time. It was about paying the suppliers. It was about keeping things moving because the business was struggling a bit. And that's where I learned the concept of doing everything every day from a financial perspective. Do your bank recs, do your purchase invoices, do your sales invoices, and then you're always up to date. And this was long before online accounting and online banking, so it was more difficult, but it was still possible. So I moved on from there. Worked with a former boss doing variety of different projects, helping growing ambitious companies. But I was more the doing rather than the thinking and coming up with ideas because he was a bit older than me. Then I did a couple of FD roles. I did some investment in German property. I think we invested about €1 billion in 6 months. And I was the corporate finance director and finance director. So that was great. And then I joined a corporate finance and business management boutique and enjoyed it, but it's not really what I wanted. I always felt there was something missing and I really wanted to set up myself. So in 2009, I set up CR Corp Solutions, and that was basically set up to provide more hands-on one-to-one experience to growing ambitious companies and help them with the financial information, the funding, and just the development and the implementation of the strategy to help them growing forward. And it's just grown arms and legs since then. It's quite scary looking back that was 2009 because part of it feels like yesterday.
That's an amazing record, and you've obviously covered every part of from corporate to large accounts to investment to small businesses. And how do you mentioned about years ago? I remember when I first started. Well, I started my first business in 1984. It was a steelwork company, and we were doing things. Everything was written down. Everything was by check, by post, written ledgers and stuff like that. And it's changed so much now. How do you see, with the advent of digital technology and thinking about small businesses and construction industry is, it's got its giants, but it's also got a lot of very small businesses. Do you feel that with technology and digitization, do you think that's enhances a business owner's resolve to look at his finances daily, weekly, monthly, or do you think it makes us a bit lazy?
I don't think it does. But what it does do, it takes away the excuses. There are no longer any excuses for not being up to date. As I said before, I learned what was that, 25 plus years ago, nearly 30 years ago, do everything every day. So there's no reason why you can't be fully up to date. Now, it's not for the business owner to do that himself. There's all sorts of apps. There's bookkeepers, whether internal or external or outsourced. So I operate with my clients that someone is doing something every day. And fine, you might slip a day or so if something happens. But in general, we are real-time information. So there's no excuse. I think the problem we have with most business owners is the one of education. That most business owners are in business because they are good operationally. So they set up a business because they could build houses or they could fix roofs or whatever that may be. That was their skill. It wasn't about running a business. And most business owners haven't been taught anything about finance. So most don't know what a profit and loss account is or a balance sheet is. They don't know the concept of forecasting and what banks need and what investors need. And over the last year, I think last May, I set up Know Your Numbers, knowyournumbers.biz. And that's where I take groups of business owners and I educate them on all things finance, done over a 6-month period. And I tell them about a profit and loss account, a balance sheet, about cash flows, forecasts, funding, cash, and things like gross margin and EBITDA, the things that accountants don't want you to know. And that might be controversial. But in my experience, it's true, because most accountants don't educate business owners. They don't explain things. They ask you to turn up once a year to sign your accounts and tell you to send the revenue a check. See you again next year. There's no added value whatsoever in that. And the business owner at the end of the day isn't getting any advice in terms of making their business better or understanding the dynamics and the cash flow and the working capital and all those sorts of things. So I really make an effort to educate my clients. And in the Know Your Numbers, we're doing that with a variety of businesses.
It's really important, isn't it, to be able to understand management accounts, and exactly right what you say. It's my experience with accountants that they'll run the accounts, a slice through time, but when you want to see how can I manage the business, what things do I need to, what indicators do I need, how do I measure how well I'm doing, how not, that kind of thing. There is a gap, and I think the work that you're doing there is really needed. And in your book, actually, I was staggered to see how many people or how many businesses don't actually have a proper system for managing their accounts, or even whether they do cash flow analysis at all.
Yeah, most don't, unfortunately, Stu. And that's why we've got the problems in many businesses that we do have, and in construction in particular, because construction has its own nuances in terms of the main contractors and the way a lot of the subbies are treated. Now, there's part of that I don't have a lot of sympathy for, because the subbies allow themselves to be treated that way. And I guess we'll probably talk about that later. But in terms of the accountants as well, the accountants can tell you what happened last week or last month, or well, at least some of them can, because they're always looking back. The key for me, and a good finance director, a good finance person can tell you what's going to happen next week or next month based on what you business owner are telling them. And that's the key. It's about the looking forward part. Yes, you need to understand where you are. Yes, you need to understand where you've been. But that's all happened. We can't change that. We can't influence that. So I want to make sure that my clients have got good, up-to-date information and management accounts, so we can actually learn from that information. What did we do last month? Why are we different from budget? Are we good different? Let's do more of it. Are we bad different? Right? What do we need to change? Did we not price it right, or did we not deliver it operationally properly? Let's break it down by project and understand that. And if you can do all of that, you can then enhance your margin and you can enhance your cash flow. And if you're looking forward as well and you've got the forecast, you can then work out what funding you need in order to grow the business. And for me, that's the key to success. The key to success is looking forward.
I wonder sometimes how much subcontractor failure is down to we're being unfairly treated, or in fact we're not looking at our books often enough. We haven't got systems in place. We don't really know where we are financially. We're waiting to the end of the year to think, well, to ask the question, oh, how we done? We made a profit, so as you say,
and you can't do anything about it at that point. I started working with a client in December. It was probably January when we started, and his year ends March, and he was well behind with information for lots of different reasons. So we got everything pulled together. We got the forecast sorted out, and he then realized where he was losing money or where he wasn't making as much as he should be. But it was 9 months too late. He'd lost that whole period of time, because if he had known 9 months before, he would have changed certain things, but he wasn't looking at that. And again, that's just it's a lack of knowledge, a lack of education, and just not having the right finance person sitting alongside you. It's not, for me, it's not a case of, right, let's produce our accounts in 7 days and aren't we really clever, pat ourselves in the back. It's about taking that information, using it to make better decisions and to influence where we're going in terms of next month, next quarter, next year. That's what it's all about. That's where you get the real value from the information.
How much do you think that it's around understanding your client's cash flow strategy and your supplier's cash flow strategy? Because what I often see in construction is never the time that they meet. They've all got different strategies. So your mid-size tier 3, tier 2 has got one strategy, and then your tier 1 has got another strategy, and then the developer's got another strategy. So there's this tension. They're all trying to. So if you talk to a national main contractor, quite often they're not so much, the construction is generally generates cash for their investments elsewhere.
Sure.
So
yes.
they're wanting to be cash rich, and then it's where they invest elsewhere is where they make their profit, but not necessarily within the construction project. So they may be happy with 2 to 5% on the construction project, but so they're looking to negotiate payment terms. They want to negotiate long payment terms with their supply chain and short payment terms with their developer. Yet the supplier, the subcontractor may be looking at all his profit within that particular project. So how do you think that could be resolved in a way to reconcile some of those differences that create so much friction and tension within that kind of ecosphere, if you like, of construction?
I suppose there's 2 points there. The first one for me is that you get what you tolerate, right? So if you put up with someone paying you in 90 days, they'll keep paying you in 90 days. Okay. And the second point is, if you're agreeing pricing and agreeing a contract at the start, you've got to remember that your contract, let's ignore all the other terms, but the two main terms in the contract is the price and is the cash flow. So if you agree the price is £100,000 and you're paid in 30 days, right? It's that's the overall agreement. It's not a case of the price is 100 and we'll pay you in 90 days. No, we've agreed the price is 100, you'll pay in 30 days. And you've got to get that right up front. And one of the things that my clients have been good at doing is pushing back on that. And there's a couple of ways you can do that. One you agree at the start. But the second one is if you can differentiate your product or service so you're not a me too. Because at the end of the day, we can all be the cheapest. If we decide today we want to be the cheapest for something, we can do that. And I think that's one of the big problems you have in construction, that people will put in prices. Oh, you'll get it if you just knock it down 10%, or if you do this or you do that, or you push the cash flow at 30 days. Right? And what you've got to have is you've got to have the confidence to push back on that and just say, no, that's my price, that's my cash flow. If you don't want to do it, I'll go elsewhere. And the problem we have is that there's always somebody who's prepared to do it for that 10% less, or to take the 30 days longer in terms of the cash flow. And as long as there's always someone prepared to do that, the main contractors and the second tier, whatever, they're always going to keep pushing back in that. So you've got to have the confidence, I think, just to say, no, that's my price, that's my terms. And if they're not doing it, you stop what you're doing. And again, that might be a bit controversial, but no, you've agreed to pay us X within this time scale. If you're not doing it, we're downing tools. That's it. And if you start doing that, then people then will respect that. And if you can then start building relationships, because with the best will in the world, most main contractors, they're not very nice to deal with, because they've got someone on site who's managing the job, and his job is to get it done on time, on budget, and to screw the subbies as much as he can. And you know yourself, that is the diktat from on top from a lot of these companies. So it's not nice to work in that. And if you can build the right sort of relationship with someone and show them that you're good at what you do, you'll deliver on price, you'll deliver on budget, and you'll do it to high quality, then you'll get those people coming back. So I've got clients who do work for main contractors, and we have no issue with the price and with the payment terms, because that's what we've agreed, and we make sure we enforce it. So if you're tolerating it, you'll keep getting it.
Yeah, absolutely. And that's the message that seems to be coming back time and time again, particularly with guests at the show. And, differentiating yourself. It's difficult for, particularly now, I think in this climate, it's difficult for main contractors to find good subcontractors or good specialist contractors, should I
Yes.
say, to do the work. So they don't really want to lose their good suppliers, supply chain. And
Exactly, and again, one of the problems in the sector is that it's seen as it's a zero-sum game. I win, you lose, right? And it doesn't need to be like that. If we could change relationships and the way people deal with each other, let's make it a win-win for everyone. And it might sound corny or cheesy, and people will be listening saying, that's nonsense, it'll never happen. Well, it'll never happen as long as people keep putting up with what they're putting up with. If you can go and have that sort of relationship, like a number of my clients have, then it works. Because you get one job, you get it sorted, you move on to the next job. And if you've got a reputation for delivering quality, on price, on time, people will keep working with you.
One of the things I talk about quite a bit on the show is cash farming. So the different strategies that main contractors have. So, as I mentioned earlier, there's the they want to use the cash to make investments. And so they want to agree the best possible payment terms with their suppliers and with their clients. And the thing is with that causes a friction. It causes longer payment terms. It puts pressure on the supply chain with longer payment terms. As you yourself being involved in investment strategies, as you mentioned earlier, I'm wondering whether there's any room for the top tier main contractors to start to involve their supply chains or supply networks in those investments, so that they're actually on, they've got some skin in the game. I mean, I'm not sure whether it actually happens or whether they actually discuss that. I've never seen it discussed with any suppliers, but it seems to me that, to get them all batting off the same wicket, to say, why are we all here? They might even find more investment through their supply chain if they involve the supply chain in what they're doing, than if they actually try to use their supply chain as cash. They're getting free borrowing off the supply chain.
And that's back to the win-win, creating win-win solutions. And to me, I have no issue with people paying in 60 days or 90 days, as long as that's the agreement. But if the agreement is the price is X and you pay in 30 days, well, you pay in 30 days. If you, main contractor, are telling me you'll pay me in 60 or 90, okay, I will price it according to that, and then I'll go and get the funding. Where companies have the problem is where they priced it on the back of 30 days, and the main contractor finds any excuse they can to pay in 90, or to pay, they'll put in an application for 200 and they'll get 120. That sort of nonsense, and it happens a lot with people I know. And that for me is where we're not all playing, the right sort of game we should be playing together. We should all be playing nicely, in my view.
Yeah, I mean, you're right. It gets down to the construction contract, and you're right where you mentioned earlier. The subcontractor should push back and have their own terms and conditions, because the thing is, these standard forms of contract, and quite often amended, they tend to be written in the main contractor's favour. So, for example, we talked about walking off site and downing tools. Well, quite often the contract terms are, well, you can't do that. You'll be in breach of contract.
Yes, and again, that's getting the terms right at the start. And I'm not suggesting that the subbies can come and say, here's our terms, because the main contractors won't live with that. But what you can negotiate certain things. And if you agree that you're paid in 30 days and you're not, well, that's a breach. So on that basis, you should be able to down tools. And I go back to, if they want paid in 60 or 90, or they're going to pay in 60 or 90, that's fine. But let's agree that at the start. Let's actually honour what we agree. That's all I'm talking about. I'm talking about people honouring the things that they're signing, and not trying to come up with excuses just for the sake of it, to knock 50 grand off here or 100 grand off here. Because at the end of the day, a lot of these people need the money at the end of the month to pay their wages and their own subbies.
I was quite interested in some of your case studies in your book, and how you've supported businesses of various different sizes. Who would be your kind of, do you have a typical type of business that come to you? Is it mainly construction? Do you get businesses from other industries come to you? Where's your core client base?
It's a real mix. It's very much a generalist approach I have, because the things that I do and the things that I put in place within the companies, they work for any sector or any sector I've been involved with. I mean, I work on the basis of two main rules. I've got 2 rules for any business owner, and it's been slightly tweaked based on Warren Buffett's rules for investing. And my 2 rules are: rule 1, focus on cash, and rule 2, don't forget rule 1. You know, and if you can stick to that, it doesn't matter what sector you're in. And then you make sure you've got good information. So you get good real-time information. So you know where you are. So you've got up-to-date current management accounts and some KPIs that are relevant to your business. And I don't mean 15 or 20 KPIs. I mean 3 or 4 KPIs that you can actually manage, monitor, but more importantly, you can influence to make performance better. And you have that up to date. You make sure your historic stuff is done and up to date, your statutory accounts, your compliance, your tax, you get your external accountant to do that. I've got most of my clients will do that within anywhere between 4 and 8 weeks after the year end. A couple of them did it quicker than that this year. I think I had 4 or 5 March year ends, and 2 of them filed the accounts before the end of April, which is pretty good, and the others were filed in April. So making sure that's up to date. And then it's about having the forecast. So having a rolling weekly cash flow forecast, 13 weeks, where you update that every week for the previous week's actuals, and then you forecast out for 13 weeks. And you've got a longer term integrated profit and loss account, balance sheet and cash flow forecast. That lets you see where you're going. It lets you work out what team do you need to put in place to deliver the opportunities, the contracts, projects, whatever you've got. And more importantly, it allows you to work out what funding you need. And in doing that, you can then engage with a funder, because the information you need to run your business from a financial perspective is exactly what a bank needs to determine whether they will give you the funding. They need to know where you are, where you've been, and more importantly, where you're going. So if you can do all of that, it doesn't matter what sector you're in. At the moment, probably more than 50% of my clients are construction related or providing services into construction related, because that's the businesses that seem to suffer most from poor information, poor cash flow, and not being properly funded. So naturally, I just ended up doing a bit more of that.
What do you think the key problems are that present from construction related businesses? What are when they come to you, what are the key problems that they're facing?
They don't have cash, they don't pay themselves enough, and they don't have enough people in the business. And that's all down to a lack of funding. Typically, I would say 80% of that is down to a lack of a properly funded business. And the reason it's not properly funded is, well, one, the business owner doesn't know, because they don't know what they don't know. No one's ever told them properly that you can do this, and here's how you get the funding. So they just continue. They start working 8-hour days, and it's 10-hour days, 12-hour days, 14-hour days, and it's Saturdays, Sundays, and doing everything they can, because they don't have enough cash to pay themselves, and they don't have enough cash to bring in other people. So what we do is we'll have a look at, right, what do we need in terms of a team going forward? Because what happens normally is that there's a whole pent-up demand of business waiting there for businesses. I can think of 2 or 3 clients I've got. I give you a couple of examples here where they were turning over roughly £1 million, but they had all of these other opportunities that they couldn't touch because they didn't have enough cash. Because what was happening was they would do the work, there would be a hiatus, the cash would come in, they'd pay everybody, they'd then do some more work. So it was like they were on the hamster wheel, and it was like, wait, cash in, cash all out, then wait, and they weren't able to get these other opportunities. So what I do with them is work out, right, what are these opportunities? How much do we think that's going to deliver turnover wise? What's the team we need to deliver that? What's the cost base? And then work out from the forecast how much funding we need. And then we go to the funder and we engage and we get the funding. A client I met just over a couple of years ago, he was doing about £1 million at the time. And we were chatting about all these opportunities he had. Right? And I was adding up in my head, I was at about 3 million based on the things he was telling me. And I'd said to him, what's your plan for the next, 3 to 5 years? He said, I want to get to 5 million in 5 years. I said, well, I started laughing. I said, well, why not? Why not 2 years based on what you've told me? And he started laughing. And I said, I know what the answer is. It's people in cash. And he said, absolutely. I said, well, I'll do you a deal. I said, if what you've told me is right, in terms of those opportunities. I guarantee I'll get you to in excess of 5 million in 2 years. And he stood up and shook my hand and he said, you're in. And he will do in excess of £6 million this year. So we're already on track. The only credit I take for that is putting in place the right information and the right funding. He's gone, he's built the team, he's got the work, and he's delivering it at very good margins. We're looking at sort of 40%-ish margins, and it's a fantastic business. And I've got a couple of similar stories like that where the demand was there. The owner was just completely stressed, no cash, didn't know where to go, panicking, worrying, how do I pay the wages next week? How do I pay the suppliers? It's actually quite simple in a lot of this, Stu, because if you fix some of the simple fundamentals, then you can get some very quick wins, in terms of focusing on cash, knowing where you are, where you've been, where you're going, and making sure everything's real time and up to date. And you then engage with the bank on that basis, and you give them all this information. You've got the bank eating out of your hand, because most banks and funders don't get that quality of information. So it immediately takes you up to the top 5 or 10%, and you think, this is wonderful, I've got all this information, right? Okay, let's have a chat, right? Funding's in place. Okay, it's not always as simple as that, but it can be, and you just understand the key metrics in your business. So from that perspective, sector doesn't matter.
And of course, if you're not up to date with the record keeping and your cash flow and your books, it can be a very stressful place to be, can't it, as a business owner?
I've always said, how can you run a business without a forecast? I ask people this. I wonder how many of your listeners actually are sitting thinking, I don't have a forecast. And and my question to them is, how can you run your business without a forecast? How do you know where you're going to be next Friday, or at the end of the month, or at the end of next month? It's absolutely impossible.
I think it's quite often that, as you say, a lot of the construction businesses are skilled tradesmen that have actually built a business around them over time. It's something that they probably haven't thought of. They're not aware of how much easier they can make their business, how they can scale their business, and who to bring in when.
But that's the point. This goes back. This is why I created the Know Your Numbers, because they don't know what they don't know, and that's not a criticism in any way. It's just because they've not been taught in it. And I had a guy 2 groups ago. There was a guy who'd been running his own business for 35 years, and he emailed me after the first session, 2-hour session. He said, "I've learned more in 2 hours than I've learned in 35 years. We need to start working together." There's a guy in one of the current groups. He's 27 years been running his own business. He's saying, "I can see the light now. I now understand my numbers, having done a few sessions." So the thing that I always say to business owners is, don't be scared about admitting you don't know these things. Because I'll put my hand up. I don't know how to build a house. I don't know how to fix a roof. I don't know how to go and do someone's electrics, because I've not been trained in that. You've not been trained in finance. So there's nothing you can ever say to me from a financial perspective and I'll think you're stupid. You can ask me any question whatsoever, and I can guarantee you're very unlikely to ask me a question I've not been asked before. So it's about me educating people and saying, look, if we focus on this, here's how you'll improve profitability, or if we do that, you'll improve cash. And if you can do all of those things, you certainly increase the value of your business and you reduce the stress as well. One of the things I do on a weekly basis, I've got about 10 meetings on a Tuesday. I do half-hour catch-up sessions with my clients, and we go through the rolling weekly cash flow forecast. So we look at last week's actuals, look at where we start the week, and then we'll look out for the next 13 weeks. Now, it's not an exercise in precision or accuracy. We're just trying to get a feel for, can we pay the wages? Can we pay the VAT? Can we pay, whatever over the next period of time? And it gives us time to put something in place if there's a shortfall. There was an MD said to me towards the end of last month, we were doing the cash flow, and the wages were due on the Friday, and he said that this is just brilliant, because I can see that we can pay the wages for the next 3 months. What used to happen is on a Friday morning, Karen would come to me and say, "How are we paying the wages today, John?" And that's how they operated. And I think there'll be lots of businesses out there who operate like that. And as I said, you don't need to, because there's a lot of very simple things you can do. And on the Know Your Numbers website, there's actually a training academy. So it's a free training academy, knowyournumbers.biz, go into training academy. There's about 70 videos there that will explain profit and loss account, balance sheet, cash flow, funding, gross margin, EBITDA, all sorts of stuff. because the whole point there is to try and educate people and help them.
That's excellent. And I'm sure there's a lot of listeners to the podcast that would be very, very interested in that academy. And I think the first step is to actually appreciate that you need some support. You need to, to be able to reach out for the support. Because as you say, sometimes it's a bit, you may be a bit embarrassed. You might be, I don't really know my numbers. How do I talk about it? How do I fix it? Can I really get to grips with it?
And that's something that honestly is very easy to do. I think the other thing that concerns some people is they look at it as a cost to the business. And I view what I do and a lot of related things as an investment. Because if you think about it, if you're making an EBITDA of £100,000, and you can go and raise some working capital, and you can take your EBITDA up to 500, let's say, or or get it to 1 million, like some of my clients have done. The cost, I certainly don't charge 900,000 for a year, and the funding doesn't cost that. So when you take out the cost of that funding and my costs or other finance costs, you're making significantly more. And not only are you doing that, you're paying yourself more. Your business is worth a lot more, and your stress levels completely reduce. Completely. You can actually sleep at night rather than worrying about how you pay the bills next week.
Thinking again about especially subcontractors, small trade. You mentioned earlier that they just increase the hours they do, and they don't really allocate themselves as a cost to the business. They're kind of giving their time free.
Yeah.
How would how could somebody like that actually start to think about their business as them as if they've got to pay someone to do what they do?
You've basically just got to decide to do it. With a lot of people like that, you actually don't have a business in that situation. You've got a job. And I know I don't mean to be cruel to people who are doing that, but it is, because the business is so heavily reliant on you that you're having to do 10, 14, 16 days, 6 days, 7 days a week. You don't actually have a business. And what you got to do is just take a step back and look at, right, what do I actually need here? Engage with someone, and whilst I criticize accountants a lot, there are a lot of good accountants out there, and if you can find the right forward-looking accountant or part-time finance director, then go and do that. It's certainly well worth the investment of getting their time, making sure you get the right financial information to run your business, because it will more than pay for itself. Pay for itself many times. I had a company I did some work for about a year ago. We're raising some money for them. They were a construction-related business, groundworks, turned over about £1 million. They thought they could get to about 10 in 2 years. So I was quite interested in working with them. So we put in place a working capital facility of £500,000, which is pretty good for a business that size. And they subsequently decided not to take it. And the reason they decided was it was going to be too expensive. They didn't want to pay my fees, and all their customers paid them in 7 days. Right. So I said, well, the first two we can deal with, right? In terms of your customers paying you in 7 days, I can guarantee they won't continue to. What will happen when they don't? Because you've got no backup. Oh, they will. They've said they will. Okay. So I'd said to the two directors, like, if you're serious about growing this business to 10 million, then you need to take this funding and get someone like me involved. It doesn't have to be me, but get someone. So I was told I was condescending and I didn't know what I was talking about. 9 months later, the business went into liquidation. That's just a prime example of someone being very short-sighted, focusing on the cost rather than the longer-term benefits of it, and just being naive in terms of cash. Their customers would keep paying them in 7 days, which was never going to happen. I was surprised it lasted as long. So for someone who's in that position, just take stock of where you are, work out the opportunities you've got, work out how much money you're losing by all of these opportunities you're not getting to. Add them up, work out what your margin is, and work out how much that would be worth to you if you had them funded, and then work out what it's worth to you to be working half the number of hours you're working and actually having a sensible and reasonable life.
I never really understood that principle until I sourcing businesses for people that wanted to buy businesses, and I kind of looked at the due diligence around that, and I thought, I wish I'd looked at how to buy a business before I started a business, because it kind of gets you to look at your own business in a way from a business perspective, rather than looking at it from a personal perspective. So you've got to see whether that business is viable. And if you're in the business, as you said earlier, if you're in the business and the business depends on you, then it's not really a business, is it?
Yeah. And in terms of buying, I've had this discussion with many people recently, and looking at the importance of numbers and picking key numbers in a company's financials. If I was only allowed to look at two numbers in a company, right, the two numbers I would pick would be the gross margin, so gross profit divided by sales as a percentage. I want to know that, and I want to know what the EBITDA is. Don't care what the turnover is, don't care what anything else is on that basis, because I can work out from that how good a business it is. Because if you've got a business that's got a high gross margin, then you've got a very valuable business. You've got a business that's differentiated. You've got a business that can dictate price. If you've got a business that's a low margin business, you're a Me Too business. You're in a fight there on price, and you will not be able to dictate your terms. You will be dictated to all of the time. And ultimately, EBITDA is what drives the value of your business. It's effectively the cash profit that you're generating from your business. So if that's the only two things I could get from any business, that's what I'd want to know. And I would encourage anyone listening who's a business owner to actually know those numbers in their business, but more importantly, work out how you can influence those numbers. How can you make those numbers better? What do you need to do to manage them? It's not just a case of knowing them, but understand what goes into them, what's behind them, and then how you can influence that, because that's how you will drive up your value and you will improve your cash flow.
I wonder if you could just explain for some of the listeners the EBITDA formula, because that's a very important one, isn't it?
Yeah, there's a video on the Know Your Numbers site that explains EBITDA. And EBITDA, and if you take the letters, it's earnings before interest, tax, depreciation, and amortization. So what it's trying to do is, it does two things. It effectively lets you know the cash profit you've generated from your business. So if you were dealing purely in cash on a day-to-day basis, your customers were paying you every day, you were paying your suppliers every day in your wages, that's the number you would make at the end of the day, the month, the year. And the reason we strip out interest and tax in terms of comparison purposes is that we could have two businesses in the same sector, but they're funded differently. So they could have different tax structures, or we could have one business that's funded completely in equity, so they don't pay any interest, one business that's completely funded in debt, so they're paying interest. So that then equalizes and lets us compare. And the reason we strip out depreciation and amortization is that's just a bookkeeping entry. And again, I won't go into details on depreciation and amortization, but there's a video on the website about that as well.
Could you just give us your website again so that people could refer to that?
Yes, it's knowyournumbers.biz. There's also CraigAlexanderRattray.com, which will give the different links to that.
What I can do is put the links in the podcast afterwards, and then people that are listening to it, companies that listen to it that are really, really interested, that want to go over there. And how could they actually contact you direct, Craig?
Best place is going on to LinkedIn. I'm on LinkedIn every day. I do a post on LinkedIn every day. It's just Craig Alexander Rattray.
So Craig, have you got time for a quick fire round?
Of course. Sounds like fun.
Okay, here we go then. So the first question: How do you start your day?
I start my day most days round about 4 a.m, between 4 a.m, 4:30. I do my morning prayers. I'm Greek Orthodox. My wife's Greek. I check my emails, and depending on what I need to deal with in my emails, I'll then go into the gym. I've got a gym in the house, so I'll do some weights, do some spinning.
When are you most productive?
Definitely first thing in the morning. I'm straight into sixth gear in the morning, Stu. I do struggle come sort of 4:35. I'm on the decline at that point.
What's something new happening in your life right now?
I'm learning Greek, and I'm building a house in Crete. What
does adventure look like to you?
Running a business without a forecast.
I like, nice one. What thing would you love to do that might surprise your friends and family?
Well, I've got a fear of both heights and water. And something I said last year I would really love to do is do a skydive, and I would love to swim a mile in open water.
Name a challenge you overcame that changed your life.
I said at the start, I think the biggest challenge was just being born in a council flat and making my own way from that. You know, everything I've ever done, I've done myself. My father said to me very early on in my life, if you want anything, just work hard and go and get it. But I think probably the biggest challenge was getting through my second divorce.
What or who inspires and motivates you?
Right. That's an easy one. Self-made people. I love people who are self-made. I've got a variety. I've got numerous clients who have either they've come from nothing, they've come off the tools, or they've been made redundant, or they've just gone and created something. So I look at people like Sir Richard Branson, Sir Tom Hunter, and Lord Sugar, and I have an imaginary board that I have board meetings with occasionally, and the three of them are on it, along with Martin Lewis. And Sir Richard Branson, he could basically turn anything into a commercial venture. Sir Tom can basically sell anything, and Lord Sugar makes sure you're generating profit and cash. So it's a great match. And
with you on the board as well is even better.
I don't think I'm anywhere near their level, Stu, but thank you.
You're getting there. You're getting there. What does success mean to you?
Happiness and making my own decisions.
What advice would you give to your young self?
Listen more.
Thank you, Craig. That's amazing advice, and one that I think we could all take, to be honest. But you've been amazing. It's been an amazing interview. So much information came out there, and I'm sure it's going to be an amazing resource for those listening that want to find out a bit more about their cash flow and get more confident with their numbers. So thanks for coming on. Much appreciated.
Thanks, pleasure. Thank you.
You've been listening to Construction Cashflow. Hit the subscribe button if you haven't already done so you never miss an episode. And remember, the faster cash flows, the faster wealth grows.